anytime you print money, you get inflation. So we'll see what happens. That's got to go through the gauntlet in Washington. That's one factor. The other that's really interesting that has a lot of market watchers really scratching their heads right now, because it's never happened before. You've got a situation of full employment, that's like 3.4%, and yet at the same time a second quarter of GDP shrinking. That has never happened before. So one way to interpret that is to say the productivity of the 2+ million new workers that have just been booked into the economy must be very, very low. Or maybe they're not really working 8 hours. Maybe they're working less, but there's something not working to the traditional model, which is why I think it's giving Powell pause, because he has been job-owning a more dovish Fed, having just done the 75 basis points. Even he doesn't know what's happening here, so he's data dependent. We've never seen this before, never in the history of the economy in 200+ years. Well, the narrative towards the soft landing has changed so much in the last 8 weeks, because just 2 months ago, nobody thought Powell could engineer anything like this. And here we are. It's very hard to call this a recession when you've got full employment. And so is this working? So at least 50% of the pundits or the market now believes a soft landing is possible. And again, a lesson learned for everybody that thinks they can time the market is, look what happened in July. You've got maybe half of this year's returns came in 4 days. And so if you weren't in the market, you didn't capture that upside, and so it's impossible to time the market. You would have never guessed July would have been a good month, but it was. Well, the truth is in the earnings, and so far everybody was waiting to see earnings completely blow up. Didn't happen. Many companies delivered, even the highly speculative tech companies, and we're more than halfway through earnings season, and it looks pretty good. Now, it's not as good as it was a year ago, but it's nowhere near as bad as everybody was forecasting, that we would be in the height of a recession right now, and we're not. And so this is a very difficult time to make a decision between fixed income and equities, because as you mentioned earlier in the show, we've got an inverted yield curve that's generally never good. But again, when you can't tell me why we have full employment, 2.5 million more people working, and low productivity, then maybe you want to be a little careful about making more decisions about raising rates or changing policy or raising taxes. They all sound like really bad ideas until you've really figured out the riddle of what's going on in this economy. We don't know. So my attitude is to stay long equities, continue at a 30% weighting in fixed income. That's very low for me. Usually it's 50%. And just wait and see what happens. My names are high quality names that provide cash flow and distributions. But it doesn't matter what sector you pick. You've been doing quite well in the last 4 weeks. So the question is now, what's next? Many people think, well, another one is going to be at 1%. Maybe there'll be an emergency meeting, but I don't think so. He's in the same boat as everybody else, trying to figure out, where are we in this recession? Is it going to be maybe 2 or 3 quarters of slower growth or no growth? We haven't really called it yet, because it's so perplexing to have this much employment. For every job, out there in America that is available, there's a ton of people that don't want it. I mean, you can't hire anybody anymore, which is incredible. And, minimum wages in California, $15 for service providers, maybe in the food industry. You can't get anybody at $15, 21, 22, 23 right now. So the economy is self-adjusting. There is a ton of people that just don't seem to want to go back to work.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video. Link is in the description. Thank you.